Anyone who tells you that they have some secret formula or secret strategy to make day trading easy is lying to you. Day trading is one of the hardest industries to get into. It is one of the hardest industries to maintain a career in, and it certainly does not get easier as soon as you get funded, build up your live account, etc. Things only get harder as time goes on, and they never get easier. And that's where I'm here to tell you. Day trading is about probabilities. Day trading is about making things simpler. It's never going to be easy. You're never going to have a 100% win rate, but there is certain things you can do to make the process more simple, to increase probability when it comes to win rate and how you're taking your trades. So yes, I once was one of those guys that used to mark up my charts with all these fancy lines, all these fancy boxes, all these fancy sweeps and everything. And I was failing. I was losing, and ultimately I would get funded accounts, I would blow them, I would blow evals, etc. And it wasn't until I just simplified my trading that things actually did get a tad bit more simpler, as you could say. Like I said, it's never going to be 100% easy. You're still going to fail, you're still going to lose, but making some simple changes that simplify your trading strategy can honestly help increase your win rate and increase your probability of winning trades. So without further ado, I'm going to get onto the charts and I'm going to show you some things that I did to simplify my trading, some back testing that simplified my trading, and yeah, we're going to explain what you can do at home to potentially make your trading a little bit easier. So the first thing I'm going to take you guys through is actually just a couple key concepts here that helped me get better and keep my trading simpler. The first one is, out of these three terms, understanding price action. Price action is extremely important. It is the data that is being printed on the chart. It is the market structure. It is what we are looking at as traders when we are trading the market. We are looking at price action being printed. So for example, when we look at this NQ chart here, we take a look at the price action that is being printed, the data that is being shown to us on the charts. What do we have? We have a low up to a high that makes a new low, that makes a new high, that makes a new low, that makes a new high, and we can hope that it continues to do this just like that. That is a simple understanding of price action. What also do you have here? Market structure in these areas. You have different areas of market structure that are printing price action. It is understanding stuff like this that helps us understand what we are looking at on the charts, which is first and foremost most important when we are looking to take trades. Next is something that actually ties into building the strategy that keeps trading simple, and that is understanding key levels. Key levels are extremely important as well. They could be pre-market highs, pre-market lows, imbalances. They can be areas of support, resistance, supply, and demand. There are so many key levels on the chart that can help you understand where you are looking for price to go before you actually execute your position. So if we look at the chart here, let's actually mark up some different key levels so I can show you guys some examples of some key levels that you could use in your strategy when you are building it. The first thing is I like to do is sometimes start on the daily time frame. The first thing I like to do is look at the day we are on. Okay, we are right here. I'll get my little line tool out. I look for the previous day. So here's the previous day. I'll mark out the previous day low, and I will mark out the previous day high. Those are two key levels that I like to use. Then I could go down onto the 15-minute time frame, and I could zoom out a little bit, and I could mark out pre-market low and pre-market highs. Here, this is pre-market low right here, and then we got pre-market high. So those are pretty close together. So what I would probably do is end up drawing a box like that, and then just deleting both of the lines and understanding that that box area is my pre-market and daily high and previous day high area. As well, you could go down to the hour time frame and you could mark up certain areas. So what do we have on the hour time frame? Okay, well, we have an area of demand right here. This is an area of demand on the hour time frame we could look for price to pull back into. I probably wouldn't trade this area, but as you can see here, we have an area of supply right here that price ended up breaking through and not holding. But all of these are different key levels that we can use as traders when we are building our strategy. So when we say, okay, where do we want price to come to? We want price to come to one of these key levels before we are looking to take a trade off of them. We're not going to take trades in random chop. We're not going to take trades in random areas where we have no clue what's going to happen. We want price to come to one of these key levels, and then we are going to look for a reaction off of these key levels before we are able to execute the trade. That leads me into my final point here of the 3 things I want you guys to understand, as I just mentioned it previously, is understanding reactions at key levels. Oops, let's fix that. There we go. Understanding reactions at key levels. Okay, so what are reactions at key levels? Well, basically, you're either going to get a reversal off a key level, or you're going to get a breakthrough of a key level and it's just going to continue, or you can get chopped at a key level. Getting chopped at a key level is extremely difficult to deal with. I will say that. I will be honest up front. If you are making it to a key level and you are just chopping, it is really hard to deal with because you don't have a clue which direction price wants to go reacting off of that key level. But most of the time when we get to key levels, we are looking for either a reversal off the key level, or we are looking for a breakthrough of the key level for a continuation to the down or upside. So let's look at this. Let's say we mark out this area of demand right here as our key level. Bang. We would want price to come down to this area of demand, show us that price wants to hold this area of demand before it continues to the upside. That's important, but what is the important part that we are looking for? We are looking for what types of candles at these areas of demand. Okay, so let's zoom this out a little bit. One of my favorite types of candles to get for a reversal is either a bull or a bearish hammer candle. And let me explain to you exactly what that is. That would be this candle right here. So what happened? Sellers tried to drive price to the downside, but unfortunately for them, the buyers stepped in and pushed it all the way up. See? Bang. And then bang, price continues to go up. Same thing here. This is a little bit of a larger wick, so you'd probably want to stay out of something like that, but the point is the same. Sellers at one point had price down here, but buyers pushed it all the way back up, forcing the candle to close up here, making all this selling pressure not invalid, but almost invalid. And then bang, all of a sudden you get the move to the upside. Okay guys, so I happen to find a bearish example now as well. So you have your area of resistance here that price continues to reject off of, and look at this. You end up getting, what did we end up getting? As I pointed out before, a hammer candle, but this time it's bearish. Bang, right here. Buyers tried to push price up with this wick right here, but sellers said absolutely not, and the candle ended up closing down here. And what do you get next? You end up getting, you could have placed your stop loss right here, take profit at these lows right here, and you would have ended up hitting a 1 to 2.7, 1 to almost 3 risk to reward ratio. So there's so many different reactions that could happen at key levels that we'll get into when we are actually back testing live. But this is just a little basis of my absolute favorite types of reactions to see at key levels. So now that we've outlined what we're looking for on the charts and some basic understandings of how to build the strategy, I'm actually going to show you 3 strategies that I love to use, some backtesting examples of them, and some live examples on the charts. So the first one I'm actually going to show you is the orb strategy, the opening range breakout. What exactly is the orb? What you are basically doing is waiting for the first 15-minute candle to happen. So that would be for New York session where I live, 9:45 a.m. Eastern Standard Time. You are going to mark out the high wick of that candle and the low wick of that candle, and then you are going to look for a breakout or a break and retest of one of those wicks. So without further ado, instead of just telling you about it, let me actually show you on the charts what I mean, and we will live backtest an orb example. All right guys, so here we are on the backtesting platform looking to take an orb trade for an example. So as you guys can see at the top here, it is 9:45. This first 15-minute candle is printed. As I stated before, you're going to mark out the top wick of the 15-minute candle, and you're going to mark out the bottom wick of the 15-minute candle. Next, all we have to do is wait for a break and close above or a break and close below, and a retest of the area to look for a continuation. So let's end up seeing what we get. This is good. Price moved down even more. We got multiple closes under the area, and now we are retesting the line here. Not only did we retest the line, the next candle has flipped bearish. So by this point, there's no reason not to enter this trade. We have come back up to the line. The next candle has flipped bearish. And that point, let's get in. So let's actually see what happens. We can look to target a simple area like that, and we can look for a nice move down, popping around a little bit, but we're going to end up hitting take profit just like that. And the same thing goes vice versa for the upside. If price was to break out to the upside, come back, continue to reject whatever, hold off the line, flip bullish, and then we look to take the position to the upside, it is no different than the downside, just different directions. And another good thing about the orb is not only does it give you your trading area here and up here, if price is all in this choppiness with inside here, this becomes a no trade zone. So that not only helps you get selective better trades, but it helps you stay out of trades that you know would chop you up and you shouldn't be taking anyway. Next strategy I want to outline is key level bounce plays. One of my absolute favorite strategies to take are key level bounce plays. As I mentioned before, we are looking to price to come to one of our key levels. We are looking to mark it out, have price reject and react off that area and give us a reversal or a bounce off that area to continue back to the upside or back to the downside. So without further ado, as before with the orb, let's get onto the chart and let's show you an exact example of what I'm talking about so you can see it for yourself. Okay, so for the key level bounce play, for this example, we're going to use the pre-market low and the pre-market high. Like I said, you can mark out any key level that you feel necessary, whether that's an imbalance, whether that's a supply or demand zone, an area of support and resistance. The list goes on and on of the areas that you can mark out as levels of interest or key levels. But for this example, one of my favorite levels to use and one that I feel reacts mostly is the pre-market high and low. So the first thing I'm going to do is take my tool here and I'm going to mark out the pre-market low, this 330 area right here. That is where it starts. We're going to take our tool, we're going to mark out the pre-market low. Pre-market starts here, that's London session, whatever you want to call it what you want. So we got that, and then we got the high up here. So that's our levels that we're going to be looking to trade for today. So now all we're going to do is we're going to wait for price to come to one of these levels and we're going to look for a good reaction. So bang. Okay, here we go. Okay, perfect. So not only that, we get price comes down, rejects the area, selling pressure died off, and we get an engulfing candle off the area, two bullish candles in a row, and an engulfing candle off the area. Another thing that gives me confidence about this is that we have an imbalance right here, bang, that has been inversed. This imbalance right here, bang, bang, has been now inversed. So what we can do is look to enter this trade. We'll put stops a little bit below this low. We'll target this area up here and we will look to enter the trade and hit take profit. And bang, just like that, guys, take profit has been hit. So that is one way that you can look for reversals at key levels. Same thing when it comes to this area up here. We could look for price to come to this area, bang, bang, and then make its move back to the downside. It's the exact same process, just again, different directions. The last strategy I want to present you guys with is the key level break and retest, another great strategy that I love to use. So before we did the key level bounce play, we looked for price to come to an area of interest, a key level, to react and to bounce off of it to give us something that would indicate a reversal. This one, we are looking for price to break through the area. Well, we're not looking for it, but if price breaks through the area, we can then look for price to come back up to the area it broke through, retest, reject, hold off of it, and then look for a continuation back to the area it once was. So just like before, we'll get onto the charts. We'll outline an example of this so you guys can see exactly what you should be looking for. Okay guys, so here we are on the charts for the break and retest backtest. So for the break and retest, you can mark out any area of interest you want and look for price to break and retest it. My personal favorite one is support and resistance. When I look for break and retest plays, the most reliable areas to me are just areas of support and resistance. So we'll go ahead and mark some of those off to start. Well, what do we have here? We have two bounces in this area right here. We have a break above, and then it continues, it bounces off here, comes back, bounces off again, and then we get the continuation. We also have an area right here that price continued to hold off of several times. So now all we'll do is we'll switch down to the lower time frame and we'll look for price to either, it's actually already broken above this area, so we can look for price to come back down, hold this area right here. We get the break above, the continuous closes and holds here. We can look for price to come back, hold the area, continue to retest, and then look for a continuation to the upside. That is something we could very well look for, but we'll just have to play it out and see what we get. Okay, so price ends up doing some weird stuff over here. We don't get the hold we want. It breaks down below and we end up getting a retest here. Okay, a retest. Okay, that's perfect. This is what we're going to end up taking. We get the break, the retest, and then the engulfing candle hold off the area. So this is a great trade to enter right here. We're going ahead and put our position here. We'll keep our stops a little bit above. We'll target something like this, a light little day like this, and we will wait for price to either hit stop loss or take profit. And as you guys can see, wow, that was a quick one. It is going to hit take profit. That is the same thing if price were to do it up here. We waited for price to try to come back down here, but we didn't get a clear reaction. We just kind of got chopped. Nothing clear to make me say, okay, I want to take this trade. But it is the same idea if you were to take a buy position. You were looking for price to break above, come back down, retest the area, and then look for that continuation to the upside. It is the exact same thing. So guys, I'm going to go ahead and end the video there after showing you guys 3 simple strategies and 3 simple things that you can do to understand trading better. Like I said at the beginning of the video, and I want to stress it again before I leave you guys here, is trading is never just going to be easy. It is never going to be, oh, well, I'm just going to sit down and make a bunch of money like all your favorite gurus are telling you. It is going to take effort, time, passion, sacrifice, etc. And it is never going to just be easy. You are going to do things that have to simplify the process, that make the probability of winning trades higher. And that's what I tried to show you guys here. I never claimed any of these strategies to be easy, to 100% increase your win rate, etc. I claimed that these strategies will help simplify your mindset and simplify your trading without having to mark up a bunch of charts lined in boxes on the chart. So without further ado, guys, I appreciate you guys all being here. Don't forget to like and subscribe to the video so we can continue to get more content out to people learning to trade. I love you all, and I will see you guys in the next one.